again from ShortMeTina.com with my daily recap. What is today's date? Today's Tuesday, so happy Tuesday. Clearly, I am in better spirits today. Not 100%, but in much better spirits. So definitely glad for that. So again, thank you for being here. Thumbs up if you enjoy the video. Make sure that you subscribe as well. We're going to start off with the recap of the S&P 500, the SPY. It's a daily chart essentially dating back to around 2018. So you have about 2 years worth of data. We closed at 326.88. And for those that are new to the channel, definitely go back. And this is why I do daily videos. Hold me accountable for when I get things right, for when I get things wrong. So if you want to fact check this, it's there for the world to see. I put myself 100% on the line. Anyway, I want to say since October around here, when it seemed as though the market was actually going to sustain this breakout, which I had a feeling it would have, essentially said, well, if it does sustain this breakout, I see the market getting to around 328 to 330 before pulling back. I said that that should happen towards the ending of 2019. I gave it up to December 31st, 2019 for it to happen. While we did get into the 320s, I think we went as high as like 323, 324. So I got relatively close considering I made that sort of outward projection when the market was under 300. So while I was correct, I was a bit too early. It did not happen at the ending of 2019. In fact, it took until early January of 2020 for it to happen. So I was about 2 weeks too early. Anyway, we got to around that 328, 330 area. In particular, or specifically, going as high as 332.53 right around here before pulling back. And I said to I said, well, you know what? Once we get there, we should kind of pull back. And even looking at the market before this drop here, you know, the days leading up to the drop, I was like, well, you know what? Market is looking a little bit toppy. We need to pull back. We did, in fact, pull back with the exception of today. The previous 2 days, we pulled back, and I did the calculations to the tune of about 3%. Now, 3% is not bad. That's a decent pullback, but I still think for this market to look the healthiest, we should pull back a little bit more, another 3 to 5% in my opinion. It doesn't necessarily need to be 10 or 11% to fit the quote-unquote textbook definition of a correction, but we need to pull back some more. So you're asking yourself, well, was that the pullback, that 3% move, and we're about to actually go on to, you know, surpass that 332 all-time highs and go on to achieve higher highs? Well, that's to be seen. Definitely, I think I feel like what happens in the market with this week, perhaps even next week, should be a telltale sign, believe it or not. So what I'm going to be paying attention to heading into tomorrow is whether or not we continue this move. Like we were up on the day, we were up about a little over 1%. So we were up on the day. So for me, I want to see, are we going to continue up or will we sell off tomorrow? Now, if we do decide to sell off tomorrow, that would signal for me that the market will begin its pullback. If we actually if tomorrow we're actually up and we're up for the remainder of the week, it does not necessarily mean that I don't think it's going to be a pullback, but I think at that point the market might actually retest all-time highs, go a little bit higher before that pullback. Hope that makes sense. Re-listen to it because I'm not going to do it all over again. What else? Anyway, and so we are looking at StarBucks right now. It's a daily chart dating back to 2016, but it's up here. Not necessarily the type of stocks that I generally analyze. I usually analyze like smaller cap stocks or some of the stocks that we're in. Not in StarBucks. I've been trying to get. I actually, you know what? When did I sell out of my StarBucks position? Oh man, I want to say it was a while ago and I, you know, not that I regret it. I did it because it was, you know, earnings were coming up. I didn't have enough cushion, in my opinion, to go into earnings with the trade. But I let go of it around $60, I want to say, or $68, somewhere around there, with the hopes that it would eventually pull back and I would be able to get back in. It has since ran away from me, going as high as almost $100. So clearly I didn't get that pullback that I was looking for. And so now I'm looking for a pullback. And I jokingly said on StockTwits that, well, I hope it sheds about 20% after earnings so I can actually get in. And the reason that there's these notations on the chart is someone was like, well, you know what? That does not happen. It only happens with lower price stocks, not stocks with this sort of market cap, and that's kind of incorrect. And so you can see here the times in which, granted, they're not quote unquote 20%, but they are up there 18%, 17%, 18%, and these are shorter time frames. So this 18% drawdown came from June to July. This one occurred in June. This one took about 3 months. But if you kind of expand a little bit more, I want to say with this particular drawdown, if you go from, let's say, January to June, about 6 months, you'll realize that Starbucks actually shed around 23%. So it's very, very common for large cap stocks to shed about 20 to 25%. It's very common for them to have those drawdowns, not necessarily in a day, but over the course of a few days to a few weeks. Anyway, Starbucks, sitting here at 88.60. I don't think it's necessarily a bad place to get in if you're looking at the longer term, not just a quick trade. For a quick trade, I wouldn't get in here. Wait for it to pull back. But I say that to say Starbucks, put it on your radar, put it on your watch list. It's a stock that I'm looking to get into when the price is right, of course. Let me know. Do you like Starbucks? Are you in it? Is it not your cup of tea? No pun or pun intended. I'm not even sure. Anyway, comment in the comment section. What else? All right, and then there's Apple. Nice quarter. Closed at, what was the closing price? $317.69. Now this move actually took me by surprise. Not that the fact that Apple is actually up, but the amount in which it's up within the last couple of months relative to their size is nothing but phenomenal. Anyway, closed at $317.69. Is up about 1.1% in after hours. I see a quote of 322.50. Company beat on, I want to say, just about every metrics. It was a really good quarter. And you know, I don't know, with Apple, it's so hard for me. Anyway, we definitely missed this one. Definitely a stock that was on our radar to get in. I think we missed it by 1 or 2 points, and you know, damn me and my discipline and my rules. But once the stock runs away from me, I try not to chase, and so I actually missed this move. When I take this trade, it has to actually come down a lot for me to take it. Or it needs to at minimum base. So I saw that to say, I think that Buffett more than likely is unloading into this. There's no way that he's remaining within his position. He's definitely unloading into strength. How far this is going to come down, I don't know. Is it a stock that you should own? Perhaps a stock that you should trade? Obviously, it's tradable. Why is this? I'm not even giving you any metrics. I'm just really telling you my thoughts on Apple. So yeah, that's my thoughts. Eventually, I'm going to add it to a longer term portfolio. As a trade, though, I think it needs to show signs of at least stabilizing, which means it needs to, in my opinion, trade range bound or consolidate. It needs to rest a little bit for me to even think about taking a position. All right, what else? All right, so I kind of spoke at length with SPY, Starbucks, and Apple, so I'm going to make the last 2 videos really quick. Ticker NNVC. I did a couple of analysis on this already, most recently yesterday. I'm just doing one today to once again illustrate, I guess that's the theme for January, right? The theme for January is with these type of stocks, the ones that clearly go up, you know, 200%, well, 150% one day, then it's down the next day, then it's up, and then it's down. Stocks like this, to gauge what the stock is going to do that particular day, it's very important to pay attention to how the stock closed the day before and how it opened up on that present day. So again, to illustrate that, if we look yesterday, where did this close at? We closed at 1580. Where did we open? We opened at 1231. That should have already told you stock is being suppressed. People are selling, hence why you got that near 50% sell-off today. And so while we're up slightly in after hours, about 2%, 860, a lot of damage done here, again, off north of 50% on the day. And the sort of indicator for anyone, including me, and although this is not my cup of tea, so I don't like to trade these types of stocks, it's on the short side anyway. So had I have been paying attention to this, then I would have known, well, today doesn't look so good because it opened a lot lower than where it closed the previous day. So that already should have indicated to you selling abound. So if you are, once again, in these types of trade and you want to kind of gauge, in particular, I guess for day traders, which I'm not, if you want to gauge whether or not, okay, should I take this trade? Shouldn't I take this trade? In what direction is it going to go today? You kind of should use how the stock closed and opens up, right? Hope it makes sense. What else? All right, and so we're going to cap it actually with ticker ARMP, up about 73% on the day. Closed at $4.85. It's actually up slightly in after hours, 2%. I see a quote of $4.95. So it's somewhere around, not too far. It closed at, closed at 485, although you're seeing 494 here. I think this is just reflecting what's going on in after hours. So it closed at 485. And it's up in after hours. I see a quote around 495. So it's essentially right around here. Anyway, when it's high is around 692, confirming volume, you have that gap up. So I'm going to end it really quickly right now. Will this rally continue into tomorrow, or will there be a sell-off? What should be your indicator? Yes, yes, yes. How does the stock open up tomorrow? So if we open up below 495 or 494, that does not look so good. If we open up above, more than likely you'll have a bit of a run, if not in the first 30 minutes or an hour. Again, if we open up below 495, may not look so good. There might be selling. And just bear in mind that there is that gap right here to be filled of around $2.90, which eventually will be filled. Anyway, let's cap it there. Tina here once again from ShortMeTina.com. If you enjoyed any portion of that video, do 3 things for me. 1, comment in the comment section. Do not forget to give the video a thumbs up if you enjoyed it. 2, ensure that you are subscribed to our YouTube channel at ShortMeTina. And 3, right now, this is the last thing right now, I'm hosting a free free.com. That's not the website, but it is free. 14-day trading course. I've been trading for about 20 years, and these are just some of the things that, had I have known when I first started out, I would not have lost all the money that I did when I first started out. So it's completely free. So if you find yourself losing money, and trust and believe, you'll be surprised how much you can lose and how quickly if you don't know what you're doing. I give you some tips to actually kind of avoid that that rite of passage, quote unquote, blowing up a trading account. So if that's something that you're interested in, you do not want to, you want to be a trader, but you don't want that rite of passage in terms of blowing up account, you can take advantage of that free 14-day trading course by heading on over to our website, ShortMeTina.com. Sign up, become a member. Thank you for listening, and as always, thank you for the support.